What is going on YouTube? It's Brendan for Market Makers. Guys, it's time for the Sunday kickoff show. Bitcoin's been flat. The other markets have been giving us some great trade entries, so definitely suggest you check out our sponsors, SimpleFX, for the equities, commodities, Forex, small handful of cryptos as well. Link in the video description, and BITGET to trade all the cryptos. Guys, that sale we are doing for our Discord channel that has almost 13,000 people on it, it is half off. $20 gets you in the room for education, community, trade signals. Come check it out. That link is in the video description as well. Download Discord, verify your account, then click that link. Come hang out with us, at least for the month. See if you like it. I think you will. Fantastic place. Let's talk about the charts and what we're getting into. Guys, the markets have been pretty flat. We're getting some good trade entries in some of these other markets, but Bitcoin has been really stagnant. Now, remember, you guys watching this channel, I gave you this 28% drop the day before it happened in a trade setup on my YouTube video. This was a day after the Dante's Descent pattern completed, and now we've just been trying to make a bottom. We have the 3-1 angle here, the gradient as resistance on GAN. Guys, if we look at our wave projection here, let's go ahead and do this from that peak to the trough to the peak. It's interesting how fibs work. You look at this, you're back testing the 618 at 17.1. Like I said last video, lots of good scalps have been taking in this room around that 17.1 area when you do come up and kiss it in the smaller time frames. Been getting some good profit there. One thing I want to show you guys, the 1618, 10,000. You see that? 1618 at 10,000. You long-term subs will know from watching this channel, this is a wave projection down. And I want to point this out because the long-term subs that have been watching this channel last November, December, talking about the macro market cycle that was going to be coming, understanding the macro market cycle that we're trading in, that Bitcoin has only existed in the longest equities bull run in the history of the stock market. And everybody keeps talking about, oh, well, yeah, Bitcoin will draw down at some point, 85% is the normal, then it'll go back up. Bitcoin's never existed in the macro market cycle that we are in now, which is an equities bear market. But after we got that high in November, within 48 hours of the Russell making its high, by the way, which you heard on this channel, and I took the trend-based fib. If you look at my videos from November, December, I've been showing you this. The 1618 has you at 10,591. The 8-1 angle of the GAN fan, the gradient here, lines you up at that same number, 10,591. Now, how many YouTubers and Twitter people are out there? I saw Emperor BTC. He tweeted last week, 10,500 or 10,000 to maybe 13,000 looks like a good long-term range. You guys got this number from me over a year ago this month. A year ago, I gave you this 10.5 number. And right now, we got as close as about $5,000 to that 10.5 number already. And if you compare that to other YouTubers that up here at 69K, 60K, we're talking about 100, 250K. But yet you look at some of these videos, guys, and I understand being bearish when everybody else is bullish, you're not going to get as many views. This channel has grown phenomenally, and I'm very happy with it. But there's people in this place that saw this happening. Crypto Savvy saw this happening. You guys know I did a joint live stream with them earlier this year. We're going to try to line one up again soon. But I saw this happening, and you got the 10.5 number a year ago, guys. It's all about understanding the cycle that we're trading in. Very important, because where I disagree with Emperor, that tweet he sent out. Yeah, like I've been saying for weeks now, we can go to 10.5, 13.2. That's what I've been saying for weeks as the actual target for a bounce. That's not the long-term bottom, guys. Your long-term bottom, and you guys have seen multiple videos from me on this. Go watch my market collapse video. Go watch some of these other videos that I've done, but you're going back down to that pandemic low area. Why? Couple of reasons. One, that's proven Bitcoin long-term support. I have that number at 3,956. That's where you fell when you had the Black Swan event and you found support there. Could you go below that? Of course you could, but this is TA. You have to have some type of target. Could you never get to that target? Maybe bounce at 8, bounce at 5? Of course you can as well. But guys, you have to remember the stock market hasn't really sold off yet. We still have positive GDP numbers coming, if you want to believe what the Fed's putting out there. So we haven't even gotten to the meat of a recession yet. The 3-month 10-year yield curve is inverted as a 100% success rate for predicting a recession. Earnings still have to come down for Q1 next year. We might not get our recession till after Q2 next year. So we'll see how these numbers keep playing out, but it's coming, right? So we know interest rates the Fed is raising rates. It's going to suppress demand. And as inflation, whether it comes down from 7.7 to 7.0 to 6.8 to 7.5, it doesn't matter. Those are sustained higher prices. The consumer's getting weaker. We once again had record credit card debt. Remember, when you see these numbers like, oh, retail sales are up 1% or one spot, whatever, one spot X, one spot 5, whatever it is, they're not using inflation adjusted dollars. That's people paying more money for the same goods. So the volume of what they're buying is the same, right? The dozen apples they're buying is still the same, but it costs more. We also look at consumer credit card debt up 8% year over year. Well, what else is 8% roughly? Inflation. So doesn't that make sense? You're paying the difference with your credit card to cover the cost of inflation. These things are like termites. Inflation is like termites that goes into the wood. It takes time to weaken the structure being the marketplace. Now, Bitcoin being super speculative, the cryptos being super speculative, you're seeing these events happen. And here's the thing, guys. Here's one thing I love. When FTX happened, black swan event. When Celsius happened, black swan event. That's not a black swan. That's the market cycle. As I've been saying over and over again, predicting failures. You're going to get failures when you have these bubble market cycles, okay? Especially in the speculative asset side. And even on the other side, we already saw what happened with Credit Suisse, having to break apart and spin off divisions of Credit Suisse. You're going to see this when it gets bad, okay? We saw this in 2008, obviously, the cascading effect in the banking space. So this is all still early. So what we're trying to do is trade in between these big macro movements. We're trying to trade, and of course, find these trades like that 28% downturn. But I just want to underscore, following people that understand the market cycle is very, very important because, again, I'm not any type of genius. Although my mom says I am. I'm not any type of genius, but I saw this happening a year ago. This is why I've been pulling that trend-based fib a year ago to show you that 10.5 number. And so many people are talking about that number now. It's kind of hilarious, right? And I do think, like I said, we're going back to the pandemic lows. And guys, that's just a rule of thumb for all the markets. If your friends say, hey, where do you think the stock market's going? You can literally just say the pandemic lows if you agree with my TA. Now, I have the specific numbers we've gone over in those other videos, so watch those other videos, again, like the market collapse video. I forget what the other ones were called now, but you'll find them on my channel. But you'll see those targets. I have 1841 for the worst case scenario for the S&P, which again was what, a 61.8% drawdown for the S&P. I know there's crash callers that have much darker numbers than me, and I know most of Wall Street has much lighter numbers than me. Oh, we could go down to 30% or 35%. Just remember, guys, averages. Market data means something. Every bubble crash, the S&P has gone down a minimum of 50%. The S&P's down like what? 21% right now. We'll check it out when we get there. But just be aware of that because progressively price moves in waves and you're going to see price moves up and down. Same with Bitcoin, same with crypto. You guys watch channels like this, I'm sure, because you want to be able to trade some of these things, right? So as a trader, I look for these trades. I share what I see. You definitely get a hell of a lot more trades in the room, as well as the education to be able to do what I do with the techniques that I use and our professional staff. So definitely consider checking that out. Let's go ahead and start off with the 10-year. 10-year, again, a little bit of a rebound here, pushed up to 3.819. The higher the 10-year, the more pressure on the markets, the equities markets, the crypto markets. And again, remember I said this last week, when we were here at 3.8 over in this region, this was detrimental to the markets. Could the markets possibly sustain it? And now when we drop to 3.8, this is bullish for the markets, right? It just depends who you watch. And if you guys are watching CNBC, if you guys are watching it, just remember these panelists, these portfolio managers and these hedge fund managers, they make money by charging you fees for you to give them money to invest. When you give them money to invest, they have a set amount of time that they have to invest your money, or else they have to return your money. So it is very biased for them to always be super perma bullish. That's how this industry works, okay? It's very biased. Remember, the vast majority of money money. I've seen the studies that show over 90% of the money in the world in the markets is long. Okay, shorting is an art form. 90% of the money wants to be long. So you always want to have that bullish narrative in the marketplace, even in a bear market. This is why every single rally is, could this finally be it? Could the Fed be pausing? Could the Fed be pivoting? Could the Fed not need to raise rates as much? You're going to hear this evolve as the time goes on. It went from, the Fed won't raise as high to the Fed's going to pivot to the Fed's going to pause, and now a combination of both. I don't even know what the theory is now for the bullish argument, but we're going to watch it go up and down in waves, guys, using TA. Looking at the DXY, of course, the DXY didn't come down to 104 yet. It's stuck between the 200, what is this, a 200 and 233, the 150 and the 200 moving average. So if we break back out to the upside, we'll see what happens with this. Rate of change, obviously, we had a bearish trend. And, strong dollar, again, puts pressure on the markets. You're at 106.969. And you don't need the dollar to be high. I've said this multiple times, guys. You don't need it to be at 121 like it was in .com. Just a higher dollar in general puts pressure on the markets. Remember, when the markets all made their all-time highs, including Bitcoin in November, you're talking about the DXY at 94. Okay, you're at 106.96. So we'll see. A lot of this is going to move depending whether or not the Fed goes 75 basis points or 50 basis points in the December meeting. That's December 10th. CPI number comes out just before that. If we look at Bitcoin, again, that's the weekly. Again, I just want to show you on the weekly, showed you this last video too. These price rungs here, the price rung, you have 14K. So that's the next logical stop to me. You're hitting your head at that 16.6, 16.8 number. You come back down to 14K if it continues this bearish trend. And then underneath that, guys, you're looking at your drop. You may have 12K hit somewhere in there. You get these price waves up and down, just like you've been doing here, these lower high scenarios, okay? So you get these slinky waves down. I do think that 10,591 is going to be hit. If not this year, it'll definitely be a hit next year, but I don't think that's a bottom, but it would be a nice spot for potentially a big move up. Okay, that's tradable. If we look on the daily, guys, you can see your 200 and 233 are up at 25K and 22.3 respectively. Remember, these are descending. These will drive down to meet price at some juncture. But you look at your daily, you have below average volume. You're super constricted here. You're super tight after this 28% dump that I shared with you guys. And if we look at this, just volatility, you're starting to expand a little bit or contract a little bit in the volatility bands. Your volume momentum, it's not bad. You're below the moving average. This shows selling and buying, by the way. So you had the dumps, you had the wave up for the dump. Yeah, that was a 2 sigma value there on that dump, and then you just you're kind of just flattening out a little bit, and you're just staying really flat. You can see that in the candles. Your MFI is still bearish below the median line. That's your money flow. So you're just stacking candles side by side on a daily time frame. These are still tradable ranges for the most part. These are 1,000-point candles up and down. So you can look at this in the smaller time frames. From the bigger picture here, this would be an awesome trade wherever these come into play. The 200, 233 if Bitcoin waved up to them. But I think you're stuck for a little bit looking at your volatility being expanded. You can see this on the 4-hour here in Bitcoin. You can really contract. Okay, look how tight this snake can get, the caterpillar can get on the 4-hour. You can really contract. So you're just you're still a little bit bloated. You're bloated and you want to see this thing really expand and blow up, but you're still pretty bloated compared to this tight constriction you can get. And let's go ahead and turn that off and look at the 200, 233 here, because those are up at 18.5 and 18.9, right? So between 18.5 and 19K would be a really nice area for you to potentially get a trade. But if you look at this on the 4-hour, you could almost draw a trend line across this thing, right? This is just super flat on the 4-hour time frame. So this would be a great area for potential short if you get up there. Looking at our indicators, MFI, you're still bearish. You have 0 volume momentum. You're actually negative in the volume momentum, which you can see in the price action. So let's not hover on this too long because it's not doing a whole lot, right? If you go to Ethereum, left you guys last time, we had this key Gann fan gradient here. I'm sorry, this is a Fibonacci fan, and we fell below it, and we bounced right off the 618 at 1153.98, and that actual price there got down to 1152. So within $1. Okay, so you found support here, but again, just looking at this trend, you're bearish on the MFI. Your volume momentum is rolling over some still, and you're making a series of lower highs, but you're probably going to range here between 1153 and 1254. You haven't come up to 1254 in some time now, in several days. So we'll see. If you get stuck under this fan, there's something else to watch. But basically mimicking Bitcoin's price action, because what is that, the 150 up here? Your 150 and your 233 are substantially above you. Okay, you're 150 at 1442, you're 233 at 1764. Price is at 1171. So not a lot happening, guys, in these crypto markets. So let's not hover on them too long. Let's go ahead and jump over to the Russell, because I'm in a trade on the Russell. Many people are in trades on the Russell. Weekly time frame. Again, looking at ideal times to trade, looking at focusing on high probability trades. 618 Fibonacci fan from the pandemic low. I can't talk today. 50 weekly moving average combined here with just the upward momentum. Looking at the MFI hitting the median line, you have very bearish volume momentum. This was a high probability trade we took on the daily time frame, but this is a good quadrant to trade in. Been in and out of this trade a couple of times already, as many members have, just getting some nice movements, because we've gone up to, I think, 1908 down to 1820. So we've had some great range in there, and you can trade that again on SimpleFX, guys, if you want to check that out. All the info in the video description. Looking at this on the daily, this was the key here. So this is where my Gann fan was. So I have my Gann fan, this quadrant, again, multi-point confluence is what you're looking for in your trading, my friends. Multi-point confluence. And this quadrant right here have the 200. This is why people say, why do you use the 233 EMA? Well, look at your 200. Again, a lot of algos are based off the 200, the 100, the 50, right? But look what your 233 gave you. That Fibonacci number with the exponential moving average gave you a better entry. You see that on the daily? The 200 got pumped through. The 233 gave you a better entry. So I always use both of them. I find different data points here, but this quadrant has been effective. And what we did, we got in here on the short, fell back down, got all the way down to 1820, came back and back tested to 200 and got rejected. And that's where we are. And today's Sunday, so we'll see what futures did. We'll see if we want to come back up and do what? Potentially make a double top here, or it's going to bang our head around here. It's going to be interesting to see what happens in the markets if we get any development of a Santa Claus rally. The Russell can't move up too much more. Okay, we're going to look at the indices that can move up and can't move up. The Russell, I mean, in theory, obviously it could move up, right? But I'm talking about as far as getting rejected at long-term resistance. It's already been rejected by both of the moving averages. You can see it got above the 200, 233 here. Just in a primary downtrend, it hasn't been able to sustain this. You have the 45 angle from the Gann fan, and you have the 618. Lots of resistance here. So we could come back up for a back test to give us a nice, beautiful double top, which would be awesome. And where I'm looking for this on the daily, guys, primarily where I'm trading the daily and the 4-hour and the 8-hour, I'm looking for this on this Gann gradient here, as well as the 50 daily moving average, somewhere around that 1776. If we continue to hit our head and start moving down, more like, you know, one of these fashions where you come up, you come back up, and you start bouncing back down. I'm looking for a test down there in that range, and we'll see what happens this week, if we get any more momentum or if it's going to be kind of flat. Let's go ahead and look at where we're at now. Let's look at the Dow, because the Dow's the big outperformer. Now, the Dow's only 30 companies, but even with 30 companies over time, the Dow has about an 80 to 90% confluence with the S&P, which is really interesting. It's because the Dow's broken out in sectors. Now, again, you know, looking at primary trends, your weekly 50, you got above it. All these other times, you got rejected. You got above it, but you got rejected. So you got above it. You're really struggling here on the weekly time frame. But I do think this next wave down in the Dow, when it does start breaking down, would potentially bring you this drop, okay? And again, it'll happen in a wave fashion when you have rallies and faltering rallies to fade basically as you work your way down, okay? But this is where you're at. The Dow's outperformed. It keeps hitting its head. Let's go ahead to the daily. It keeps hitting its head on the same fib level here, the 33,791. If you see the 33,791 here, you've just been rejected. You get some momentum. You've been rejected. Here's your 618 Fibonacci fan on the daily time frame, which provided excellent resistance as well. So the Dow, where could it get to? The 1618's at 36. The Dow's outperformed so much, and you have bearish divergence on the MFI. You have low volume for the majority of this pump coming up here, and you have bearish volume momentum, okay? So again, this is all the hallmarks of making a top. I'm in a short up here. It's taking forever. The Russell short's working much faster, but this has all the hallmarks of making a top. Low volume, bearish divergence, bearish volume momentum. So I'm sticking it out unless we see some type of clear breakout and buyer step into the marketplace, because I do think this is going to retrace. Obvious area to potentially bounce from on the dailies, your 200, 233, roughly 32.4. If you come down past that, looking down here around 31, and from 31 you got a pretty nice drop coming down here to this lower tranche of whence you came. If we go ahead and jump over to the S&P on the weekly, again, if you think about the people on TV, how bullish they are, why don't you believe this could be the rally to turn it all around? I don't understand. Like, how can you not think this is the rally? But all you do, just draw a trend line, guys. You draw a trend line here. You can just connect the tops. The S&P, if you want to do it from the wicks, the S&P hasn't even come up to its weekly 50 yet. So yes, it could have more upward movement, but see, you see on your 618 Fibonacci fan here, you've been getting these wave patterns above and then down below, right? And here's your wave pattern above. You could have some more upward movement here. You could get to that 50 at 41.62. That could potentially be your Santa Claus rally, but you can also just wave back down yet again, okay? And so when you look at these things, understand when you hear people that don't look at charts at all talk about like this could be it, they said the same thing here, right? As a matter of fact, Tom Lee, who is super bullish, he's always on CNBC, right? He's a perma bull. In January, when S&P pulled back, he said this is an optimum entry point for stocks, right? Optimum entry point. Had you taken Tom Lee's advice and watching him on CNBC, let's just see what you're down, and the S&P as an index. You got down to minus 28%. Where you are right now is minus 17.77%. And of course, if you're in any individual stocks, like many Americans are in individual big tech, you're down a lot more. If you're in any meme stocks, you're down 70, 80, 90%. So just understand the experts tend to not know what's going on, and they tend to have a bullish bias on everything. So these are all wave patterns, price moves in waves, guys, hitting the same resistance point. We haven't even come up to that resistance point yet on the weekly, so you do potentially have more upside. But when we look at the S&P on the daily time frame, paints a little bit different story. Let's look at this. So you have classic Wyckoff volatility range, right? We have our base, we have our ceiling, we have our down thrust, reconfirming this base, and then we have our movement up, right? And what do we get up here, guys? We pumped up above the 50, rolled back over, you got your Livermore pivot, okay? So now you pumped up and you're hitting key long-term resistance to 200 and 233. Now, I pointed this out before, but notice you did not hit the 200. You literally wicked the 233 on the dollar. You're starting to roll over. This could be a bullish pullback. We'll see, right? Because you could be pivoting back up to test this again. So we'll see if you do get to try to pivot back up. But again, just keep in mind where this is at. This is roughly 40.50. Okay, on the S&P, you're at 39.63. So again, I think it's just limited upside potential. You could get up to that weekly 50 potentially. If you look in the history of the downtrend, the 200, 233 has been providing you excellent tops here in range. Okay, so the Santa Claus rally could be a pullback, maybe make a shape up here above it and then come back down, or maybe no rally at all. We have to see how the market digests all the information coming out, especially that next CPI. As you know, the market gave these huge 2.5-year high candles, right? Based off that 7.7 CPI. And you just did not have the participation to justify that candle. And you can see that again when you look at this. we look at the bearish divergence, the lower highs on the MFI, money flowing into the asset, the lower highs, the volume weighted RSI, and then you can see the higher highs in price, okay? Volume momentum on this pump up, dropping off the whole way, flipping negative. Again, all the hallmark indicators of making a top. Could buyers step in? Could euphoria turn into the market and really push the market up? It could, guys. It's just not likely, okay? It's just not likely if the current price action set up. And let's go ahead and look at the NASDAQ. NASDAQ on the weekly, guys, you pump back above your 200, 233. You're well below your weekly 50. That's at 13,100. Could you get up there? You got to get above the 618 from the pandemic low. Again, the NASDAQ price action, when you go ahead and zoom into the daily, classic Wyckoff again. Look where you're making your Livermore pivot. Now, remember, if your pivot fails, what are you doing? You're rolling over, and then you're coming back up, and your pivot fails, and what did you make? You make a double top, and then this is how you fall back into the range, okay? So you want to see if this pivot holds key support, whether it comes back down to the 50 or stays on the top of Wyckoff and then shoots up. And this is the quadrant for an ideal short here on the NASDAQ, right around 12.6, 12.7 to 618. So between that 12.5, 12.5 up here to the 618, 12.8, that 300-point quadrant in here would be an ideal short if the NASDAQ can do that, if it doesn't just make a double top and fall back into this trading range, okay? There's your 45 angle gradient on the GAN fan. Again, low volume on this rally up, big 2.5-year pump candle, and of course negative volume momentum, hallmark signs once again of making a top unless something changes in the marketplace. Let's look at silver and gold real quick. Silver, the poor man's gold. Got a lot of silver. So silver, I wanted to show you this because it's tracking really nicely, okay? Silver and gold are not supposed to move with the stock market the way they are. Remember, silver and gold are inflation hedges, right? But the stock market rallied, silver and gold rallied, and I keep telling you guys this, 2008, gold dropped 34%. Now the S&P dropped over 50%, but gold still went down 34%. And we're looking at silver right here because silver is more volatile, but you pumped right up to the 1618 off this trend-based fib. You see that? You pump right up to the 1618, and you're starting to show some weakness. Now what would be nice is if you do get a rebound, here's your 200, 233. If you do get a rebound back up there, you have a really nice double top to potentially trade. So we'll look for that to potentially happen, okay? If you just show weakness here, maybe pump back up, you might get a smaller double top action. Or obviously if this turns more bullish and the markets have a green week, you could see silver move back up, but then definitely watch the 21.977. Same on gold, guys. Gold pumped up to the base of our long-term Wyckoff base. You see that? Came all the way up to the base, wicked it, and you're making the same exact formation here. And if you look at gold, the 618 to 1627 has been really, really key support here for a breakdown further in gold, because if you start breaking down in gold based off these new candles and this wave projection down, guys, the gold, I mean, you can see how accurately the 618 is holding, right? But you look at the one fib at 1520, the 1618 would have you at 1345 if this really started to break down. Remember, previously I said 1425, but now that you have all these new price action candles, can take a new wave projection. That's just what I'm seeing based on fibs. None of this has to happen. It is only TA. So, all right, guys, I hope you enjoyed this video. A little bit long one again, Sunday kickoff. Go watch some football. It's kind of raining here, so I'm just going to be kind of chilling out. But come consider checking out a room. Definitely like and subscribe to this channel, and I'll see everybody next week, and we'll get another video coming out Tuesday for you guys. Take care, everybody.